All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. Happy Halloween. Today's October 31st, 2024, and our top story this morning is big tech earnings are upon us, and so far, market is not impressed. I'll be honest with you, I'm impressed. I thought the numbers were pretty good. Impressive growth, top and bottom lines by both Meta and Microsoft. They reported after the bell yesterday. Double-digit growth. I mean, you got all your typical like AI, quick AI wash the hell out of everything. That's expected on the conference calls. I'm not surprised by that. But to be honest with you, the market didn't really care. The market is more worried about what is coming, about what's up ahead. And well, the growth numbers were, I don't want to say disappointing because I mean, they're projecting double-digit growth. The growth numbers are pretty amazing. It's just this market is so cravenly bullish and these expectations are so ridiculously high because of all these stupid speeches and talking points that the CEOs are giving that there's just no possible way. The laws of physics prevent meeting these expectations. And so big tech this morning is somewhat a victim of its own success. Pre-market trading, both Meta and Microsoft are down a little bit here, not a lot. That may change depending on market sentiment, but let's talk numbers real quick. Microsoft revenue up 16% year over year. Cloud revenue up 20% year over year. Operating income up 14% year over year. These are great numbers. Azure cloud growth. Now, here's interesting. I think here's probably what's a drag on Microsoft. Last quarter, Azure's growth was 35%. In this quarter that they just reported, it was 34%, and they're forecasting next quarter Azure growth of 31 to 32%. Aha, slowing growth. So that's a little bit of a dent in this narrative of AI is just going to grow and eventually become this multi-quadrillion dollar industry. And Masa-san is out there saying, we need $9 trillion in infrastructure investments. Just congratulations, you're the idiot with the biggest number being spouted off today. Like that's all that they're really going for. So we're seeing that growth decelerate a little bit. Microsoft is saying they're being constrained by data center build out. Oh, go figure. Laws of physics apply to Microsoft, even when they're talking about AI. Yeah, you can't continue to build out these ridiculous growth rates. The numbers have gotten so big. There's not enough electricity in the whole freaking world to power what you're talking about doing. And despite your investments and your talking points about nuclear power, there is no way we are going to build hundreds of small modular reactors in the next couple of months in order to power these things. So yeah, you cannot maintain these growth rates. The market is starting to realize that. So that's hurting Microsoft a little bit. Meta, on the other hand, 19% year over year revenue growth, net income up 35% year over year. Again, incredible numbers here, double digit growth. Now, here's the problem with Meta. Reality Labs. I keep talking about Reality Labs here. They lost $4.4 billion in Reality Labs on $270 million of revenue. Ponder those numbers for a second. 270 million in revenue that you took in, and yet you've got a net loss of 4.4 billion. You think maybe, Mark, it's time to get rid of the metaverse? I'm just throwing it out there. Maybe, just maybe, the metaverse was a bad idea. I mean, I don't know. Maybe big things are coming. Let me know in the comments. Do we have any metaverse or real estate investors here? Who bought land in the metaverse in 2021? And how's that investment doing? Do you spend much time at your metaverse vacation property? Do you put on say a HoloLens or what was an Apple Vision Pro and go visit your joint in the metaverse? Probably not, but they're still spending money on it. Now, Reality Labs also includes some of their AI investment. It also includes these new glasses that Meta's working on. Because I don't know, it was like 10 years ago, Google dumped a few $1 billion into Google Glass. Do you remember that? Remember glass holes? Everybody was talking about this stupid Google glasses. Well, now Meta wants to do that. That's their next big thing. They're burning money on it, and it doesn't make anything. Luckily, Meta's advertising business is doing fantastic. So the ad revenue can continue to bankroll all of these stupid science projects. But how much longer will Meta shareholders put up with that? They're not impressed with it today. They are punishing the stock somewhat. Also, something interesting that Zero Hedge caught, Meta has missed their CapEx targets 2 quarters in a row now. In this most recent quarter, Meta was supposed to spend somewhere around $11 or $12 billion in CapEx, i.e. NVIDIA GPUs. They only spent $8 billion. So they didn't hit that CapEx target. I'm trying not to read too much into that. Maybe that was really just that delay in the Blackwell chip from NVIDIA that we talked about. Maybe that's kind of showing in these numbers. If so, it should be a one-off, and Meta should make up for it in the next quarter. Meta actually, they didn't lower their CapEx guidance. They narrowed the range a little bit from 37 to 40 billion to 38 to 40 billion for the year. So, they raised the lower end of the band a little bit there. But Meta missing their CapEx targets, I'm not sure if that's something we need to worry about or not. We probably won't know until we get next quarter's numbers, possibly attributed to the Blackwell thing. And also, guys, speaking of the AI mania and the AI bubble, we're going to talk about Supermicro again. Just absolutely dead money at Supermicro Computer. At this point, it is such a clown show at that company and their ridiculous growth targets. They are the poster child for the AI mania. At this point, the only safe thing is to assume every word that comes out of an executive at Supermicro's mouth is complete and utter BS. That's the only safe assumption. They have already settled with the SEC for one accounting scandal. They are now into another. They came out after that after that short report from Hindenburg, again, largely based on the research done by the OrcaFin. Congratulations, OrcaFin. They delayed their 10K. They are at risk of being delisted, and now their auditor has quit, something that I called back in August. The next thing we're going to hear about is how Supermicro is happy to announce their new auditor. They're out there right now shopping for a rubber stamp. They're going to dangle money in front of somebody to find someone that will sign off on their bullshit books. And hopefully they won't have to restate their last 2 years of earnings. When they don't find somebody, or if they can't find somebody and they have to go restate 2 years of their exponential growth, and then all of a sudden all those earnings disappear. And, they were talking about this on Bloomberg yesterday. The revenue was probably real. The earnings were manufactured, were totally fake. When that happens, you better believe that's going to spread to other AI companies. And that's not even the only AI scandal like this week. There's an AI company, Evolve, just announced late last week. I think it was on Friday, like, hey, you can't trust any of our financial statements for the last 2 years. We did an independent investigation and found out that our sales and finance people were basically lying about everything. So widespread accounting fraud in the AI bubble. Who'd have thought, right? I mean, crazy that might happen. I mean, nobody saw that coming. Also, on display today is the bifurcated economy. We got earnings from Stellantis, Cheniere Energy, and Estee Lauder that shows unless you are selling AI chatbots that tell you to glue your pizzas together or encourage teenagers to hurt themselves, unless you're doing that, you're not making very much money in this economy, because all three of those companies posting some alarming numbers here. That's cars, that's energy, and that's cosmetics. All three not really doing so well. A couple of them citing China weakness. I think that China consumer is doing a lot worse than we realize here. And last but not least, we got a lot of economic data today. We got PCE inflation. That's personal consumption expenditures. The Fed's preferred measure of inflation. It dropped considerably down to 2.1%. Still just slightly above that arbitrary 2% target where the frog doesn't notice he's being boiled alive. But they're on its way down. I'm sure the Fed cheerleaders are going to declare victory with that one. Of note, though, core inflation, core PCE, still 2.7%, which means really the only reason inflation is coming down right now is because food and energy, which the Fed always tells us is volatile and not indicative of the health of the overall economy, they're coming down. Everything else, the price is still going up higher than the Fed wants it to. So core inflation stubbornly high at 2.7% year over year. And we got some more labor data this morning. Initial and continuing jobless claims came out. They are both lower than they were last week, possibly a good indicator for tomorrow's all-important non-farm payrolls. That's going to be a big data point. We will be talking about that one tomorrow morning as well. We got a lot of stories to get to this morning, so why don't we shrink my big melon of a head and let's see what's going on in the markets. Don't forget that like button for the YouTube algorithm. And if you're new here, hit subscribe and have your coffee with the melon heads, because we do this every morning. Now, right now, the S&P 500 is down 35 points, or 0.6% lower. We've got the Dow is also down about 0.5% here, 211 points to the downside. And the NASDAQ is leading the way lower, down 155 points, or about 0.75%. Although I would point out the NASDAQ is well off of its lows of the morning that we hit around 6 a.m. Eastern time here. So NASDAQ dragging the market lower, although all things considered, it could be a little worse. The DXY, meanwhile, we've got a slightly weaker dollar back below 104 here at 103.90. That's down about 10 basis points this morning. So a weaker dollar would put some upward pressure on stock prices. And then looking at the bond market, we got yields are moving higher. Once again, more in the long and the middle end of the yield curve here. We got the 30-year treasuries back at 4.5%. That's up 2 basis points this morning. The 10 years back to 4.304%, up almost 4 points this morning. Meanwhile, the 2-year, 4.185. That's up 3 points and change. And the 1 month is at 4.732%. That's actually down a point here. So higher yields on the long end of the yield curve. Again, guys, look, the yield curve, gold, silver, Bitcoin, they're all telling us there are problems on the horizon in the bond market. We got the election coming up. All I'm going to say is, regardless of who wins, both sides lose. Regardless of who loses, both sides win, because whoever wins the election is going to get the blame for what is coming next in the bond market, and whoever loses the election doesn't have to take the blame for what happens in the bond market. So there's not really going to be any winner, and I remain of the disposition that it just really doesn't matter, because they're not even addressing the problem of government spending, and the bond market and precious metals are starting to sniff that out. Now, looking over at the commodities board, we've got gold and silver are taking a break this morning. We've got spot gold at $2,769. That's down about $17.50 here, or 0.6%, after briefly touching $2,800 yesterday for December gold futures. First time in history any gold future has traded at $2,800. Gold and silver continue marching higher, although they are taking a break this morning. Spot silver at $33.33, down 44 cents, or 1.3% lower. We've got coppers up by 0.5%. Palladium is down 0.33%. Platinum is down 0.2%. That's 2 days in a row for platinum coming down after a big run on rumors of sanctions against Russian palladium. Crude oil, 69.42. That's up about 81 cents here, or 1.1%. Crude threatening to head back into the low 70s here. And Bitcoin is down a little bit here this morning, at trading just above $72,000 at $72,028 on Coinbase. That's down about $300 from a year ago. Little bit of consolidation after breaking out from this bull flag pattern about 2 weeks ago. Now, let's talk a little bit about Microsoft here. Microsoft shares drop on disappointing cloud growth forecast. It seems it's that growth that has people worried. People aren't paying so much attention to the numbers they post. They're more worried about what is coming. Data center capacity crunch is constraining the shift to AI. Real world physics getting in the way. Who'd have thunk it? Microsoft Corp shares dropped in extended trading after the software maker forecast slower quarterly cloud revenue growth, reflecting the company's struggle to bring data centers online fast enough to keep up with demand for AI services. Sales from the closely watched Azure cloud computing business will rise 31 to 32% in the current period. Microsoft executives said Wednesday on a call following its first quarter earnings report. Azure revenue posted a 34% gain for that period, adjusted for currency inflations, which was a slight deceleration from the 35% growth a quarter earlier. So you kind of see where we're going here. 35, 34, 32, maybe 31. Growth is slowing. That means multiple compression could be on the horizon for this company here. And, well, Microsoft really doesn't want to see that. On a call with analyst, CFO Amy Hood said some data center capacity Microsoft had been counting on for its push into AI didn't materialize. That will constrain revenue growth in Azure's business during the current quarter, which ends in December. Now, much like the case with Meta and their failure to meet their CapEx goals, I don't know if this is big tech kind of trying to back away slowly from all the money they've been pouring into AI investments, or is this just the reality that NVIDIA had this delay with their Blackwell chips, and because this new version of chips was delayed by a couple of months, it meant we weren't able to bring as many data centers online in this recent quarter as we were hoping? That's possible here. So I don't want to call out a trend just yet, but there is a couple of things to be worried about in this report here. Now, again, Microsoft earnings, if you take away the disappointing growth, 16% revenue growth, 20% cloud growth, operating income up 14% year over year. I mean, fantastic numbers for Microsoft. But the worries about the growth are weighing on the stock ahead of the opening bell. It's down 3.6% here, trading at $416, down about $15.60. Although year to date, Microsoft still got room to spare here. We started the year around $367, so still up big on the year. Now, we also got earnings from Meta. Meta warns of worsening AI losses after sales narrowly beat. Meta platform CEO Mark Zuckerberg will ramp up heavy investments in AI and other futuristic technologies, continuing a years-long tug-of-war between the company's long-term bets and the core advertising business that provides the vast majority of Meta's revenue. Zuckerberg warned investors Wednesday that Meta will continue to spend significantly on infrastructure and other projects like the metaverse and AI-powered glasses. Good luck with both of those efforts. He believes are core to the company's future. That will be supported by ads business, which isn't generating the kind of momentum Wall Street expected. We're seeing AI have a positive impact on nearly all aspects of our work, from our core business to new services and computing platforms, the Meta chief executive officer said during its third quarter earnings call. There are lots of opportunities to use new AI advances to accelerate our core business. Yada, yada, AI washing. Meta cautioned that losses from Reality Labs, its division focused on AI and augmented reality. Are we still talking about augmented reality? Oh, okay. I thought Apple Vision Pro put that to bed, but all right. AI and augmented reality will continue to widen meaningfully this year, adding that the 2025 budget is still being finalized. Reality Labs reported a $4.4 billion operating loss in the quarter. Guys, that $4.4 billion operating loss was on, what was the number again? $270 million in revenue. I mean, they are just setting money on fire at Reality Labs. With costs projected to reach nearly $100 billion this year, Meta is putting pressure on its core advertising business to fund the effort. Meta told investors on Wednesday that revenue for the current quarter would be between $45 and $48 billion. Analysts were expecting fourth quarter revenue of 46. So, Meta, again, a little bit of, I don't want to say slowing growth. They're basically, their problem is too much cash burn. And the shareholders aren't liking the fact that their CapEx plans are still so lofty. Now, Zero Hedge put this one out on Twitter. This was pretty important last night. What you're looking at in the green line is what the CapEx has been every quarter going all the way back to 2021. Now, the red lines shown in these last few quarters here, these are what the CapEx projections were or are for that most recent one. Now, you'll notice here in the previous quarter that they had projected somewhere around $9.5 billion in CapEx, but they only spent just over $8 billion. And then in this recent quarter, they were projected to spend about $11.5 billion in CapEx, but they only spent about $8.5 billion. So Meta is not reaching its CapEx spending goals. Now, it's possible this, again, related to the delay of the Blackwell chips, and maybe this is a one-off, but much like we saw with Microsoft, how they're saying we're having trouble building out our data centers fast enough. Possible they're trying to walk back their CapEx here. It's kind of like they're walking in backwards, saying they're leaving, that kind of thing. It's possible that Meta and Microsoft they're feeling trapped by all of this CapEx spend. They know the second they reduce their CapEx spend that their shares are going to collapse because everybody's going to realize this whole AI bubble is a mess and that it was never real to begin with. And so they're just kind of like slow walking it. It's possible that's going on. Maybe I need to wear my tinfoil hat when I say that. I mean, it's possible I'm just being a little conspiracy theorist here, or maybe just Blackwell's delay resulted in less CapEx. And now that Blackwell is supposedly commercially ready and they're shipping it, we'll see a big surge in the next quarters. Either way, though, Meta shares down 1.3% here, trading at $584. That's down about $8. But again, year to date, Meta stock is still up big time. So, modest pullbacks here, considering, I think, really just victims of their own lofty expectations. But speaking of the AI mania, guys, we mentioned this one briefly. The story had just broken yesterday morning on the live stream. Supermicro's $50 billion stock collapse underscores the risk of AI hype. If only somebody had been warning for over a year that this bubble is all hype, Well, somebody might have seen this one coming. In March, Supermicro was added to the S&P 500 after an epic run that lifted the stock by more than 2,000% in 2 years, dwarfing even NVIDIA's gains. If only there were signs that this was too good to be true. A 2,000% gain in 2 years. As it turned out, S&P was calling the top. Less than 2 weeks after the index changes were announced, Supermicro reached its closing high of $118.81 and had a market cap of almost $70 billion. The stock is down 72% since then, pushing the valuation to under $20 billion, the first major sign in public markets that the hype around artificial intelligence may not all be justified. Supermicro is one of the primary vendors for building out NVIDIA-based clusters of servers for training and deploying AI models. Supermicro is NVIDIA's third largest customer, but I'm sure everything is just fine over there. The stock plunged 33% on Wednesday after the company disclosed that its auditor, Ernst & Young, had resigned, saying it was unwilling to be associated with the financial statements prepared by management. Supermicro is now at risk of being delisted from the NASDAQ and has until November 16th to regain compliance with the exchange. Everything this guy, Charles Lang, says has to be viewed as bullshit, guys. All right, this guy, he has a documented history of accounting fraud. He's already settled with the SEC. It was just 6 years ago that we learned about their first accounting scandal. They settled it in 2020, and now here we are 4 years after that, and they're into another accounting scandal. This guy cannot help himself. He is a lying, crooked piece of you-know-what. I already said shit like 3 times in this stream. Why am I not wanting to say it now? I don't know. Sometimes it's on, sometimes it's off. Don't believe a word this guy says. His stock was down 32% yesterday. It's down another 5.5% today. This is dead money, all right? And there are people out there who are like, buy the dip. This is a buying opportunity. Guys, just go to a casino and put your money on black if that's what you're going to do, because your odds are probably better, all right? I mean, multiple accounting scandals inside of 6 years. If that doesn't warn you away, then maybe investing's not for you. All right, moving on from that one, let's talk about car makers here. Dodge maker Stellantis posts a 27% drop in revenues and flags progress in slashing U.S. inventories. Slashing inventories, I want you to read that as potential layoffs in the future, because we're already seeing that in the car space. Let's see what we got here. Auto giant Stellantis on Thursday reported a 27% decline in third quarter net revenues, but said it was making headway and addressing operational issues such as U.S. inventories. Now, guys, a 27% decline in revenue. I've had some people mention in the comments that they don't think the auto industry is in as bad a shape as I've been saying. A 27% decline in revenue at a time when auto prices are at all-time highs, and you're telling me I'm overstating how bad things are in the car industries? What do you call a 27% decline in revenue? Plants closing, layoffs announced on a daily basis. Guys, the car industry is telling us there are big problems in the Main Street economy here. The Netherlands-based company, which owns names including Jeep, Dodge, Fiat, Chrysler, and Peugeot, said that net revenues for the July-September period came in at 33 billion euros. Analysts had expected 36.6 billion euros. The firm attributed the drop primarily to lower shipments and unfavorable mix, as well as pricing and foreign exchange impacts. Its total stocks fell by 129,000 units between January and September to 1.3 million cars. The automaker noted that U.S. dealer inventory was cut by 80,000 units between June 30th and Wednesday. Stellantis said it's set to reach its target of slimming down U.S. stocks by 100,000 units by the end of November. Doug Osterman, CFO at Stellantis, conceded that the quarterly performance was below our potential, but said that U.S. inventories had been reduced meaningfully and were set to hit the company's targets. So meaningfully reduced inventories, there's your layoffs. We were just talking, I think it was 2 days ago on the stream, about how Stellantis just did temporary layoffs, closing at one of their plants in Detroit for about a week. So they're reducing their inventories to account for this big drop in revenues. As long as things don't get worse, then they'll bring those people back to work after the temporary shutdown. But Stellantis stock actually doing pretty well here, up 3.5%. I guess the market had already beaten this name down quite a bit. It's up about 46 cents at $13.69. But for the year, Stellantis stock not doing so well, down about 35% for the year, and certainly well off its highs from March. And another sign of the bifurcated economy, Cheniere Energy. This is a name I used to talk about a lot. This is the biggest LNG carrier in the United States. They run that big Sabine Pass liquefaction facility in Louisiana. Cheniere third quarter net down as revenue shifts to long-term contracts. Cheniere Energy's third quarter earnings fell as a drop in commodity prices and demand worldwide led to a greater proportion of its liquefied natural gas sales coming in from long-term contracts, but the firm boosted projections for certain operating earnings tallies. Cheniere, the biggest U.S. liquefied natural gas producer by volumes, posted third quarter earnings of just $893 million, down from $1.7 billion a year ago. Guys, that is a 48% decline in earnings per share. That's not just a little drop, all right? This is the biggest LNG carrier in the world. Also, third quarter revenue fell by 10% to $3.76 billion, in line with average targets. So what's going on with Cheniere is they sell their liquefied natural gas in two ways. They sell in long-term contracts. That's about 80% of their business. And that's basically like, hey, here's the price of Henry Hub natural gas plus a certain fee for liquefaction. And that's what they sell it for years, decades in advance. They book these long-term contracts. And then there's about 20% of their capacity that they sell into the spot market. That's basically determined by what is the price of natural gas today. And well, when commodity prices are lower, those spot sales tend to go up in smoke. The prices are way depressed. And so that leads to some pretty big volatility in Cheniere's earnings. During high commodity prices, you get these spot contracts, get huge profits. But during low commodities, all you get is really the baseline revenue coming in from those long-term take-or-pay contracts. Those aren't as profitable. And so because of, what's the word they used? Decline in demand worldwide, Cheniere's profit taking a big hit, down 48% on a 10% drop in revenue. So that just goes to show you guys, worldwide demand for natural gas, it's not just oil, it's energy in general. Although Cheniere stock is basically unchanged this morning, it looks like a lot of this was already built into the price here, $182 a share. And to be honest with you, looking at this year to date, Cheniere stock has held up remarkably well. It's actually up year to date, considering a 48% decline in earnings. I'd say that stock is doing phenomenally well, all things considered. And another sign of the bifurcated economy, we got this one. Estee Lauder pulls their 2025 guidance on China uncertainty and a new CEO. I'm starting to see a lot more stories like this, companies pulling their guidance for the year. Again, this is the best economy ever. Can't you tell? Nobody's buying anything except chatbots. Estee Lauder pulled its guidance for the year, citing uncertainty over a new CEO and weak demand in China. There's that weak demand story again. The New York-based company also cut its dividend to a more appropriate payout ratio, which will also create more financial flexibility for our incoming leadership team and profitable growth trajectory, they said in a statement. Sales dropped by 4% in the quarter, ended September 30th, as consumer sentiment worsened in China and a pullback in Asia hit the company's duty-free stores. The cosmetics giant also reported a net loss of $156 million, primarily due to charges associated with talc litigation. Rival L'Oreal also posted disappointing results for the most recent quarter because of weakness in China, but the French conglomerate relies less heavily on China. So that's a couple of mentions of weak demand, more mentions of the weak consumer in China. We're seeing that story repeated very often, despite all the China bulls saying the bottom is in, the Chinese consumer gets a vote, and he is saying otherwise. Look at Estee Lauder stock here, down 24% on this news of pulling their guidance and a new CEO and a cut to the dividend. Stock's trading at $65.94. That is down $21. It's down so much it doesn't even show up here on the window here, guys. And year to date, this stock has already been cut in half. Now it's dropping even more. So tough things in the cosmetics industry. I think people just don't wear as much makeup as they used to. Also, that's probably playing a role besides the economy. And then we'll breeze through these pretty quick, guys. We got PCE inflation. It continues to trend down 2.1%, just barely above the Fed's arbitrary 2.1% target, where the plebs don't realize they're being boiled alive by inflation. At that level, people don't even notice, and they don't demand higher wages. Well, we're almost there, so congratulations to Jerome Powell for that one. On a month-over-month basis, PCE inflation was a little bit higher at 0.2% versus 0.1% last month, but still within the band that we've been at in the last couple of months here. Now, core inflation is a slightly different story. Core inflation not only is not falling, but is actually showing signs that it might be rising again. Core inflation was 2.7%. That's a repeat of the read we got in August. and off of the lows of 2.6% that we saw in June. So core inflation, which doesn't include food and energy, the price of everything else, that's still going up faster, much faster than the Fed wants. It's actually about 35% above the Fed's arbitrary target. So you're not going to hear a lot of that. You're going to hear a lot of celebration in the mainstream media. Congratulations, Jerome Powell, the soft landing and all that BS. But guys, the price of other stuff is still rising too fast. And on a month-over-month basis, you can see it as well. Again, it looks like an acceleration here. September month-over-month PCE came in, core PCE at 0.3%, up from 0.1% in August and off the lows from August and May here. So inflation not yet vanquished, although there's some premature victory declarations going on. Core inflation remains stubbornly high. And then the other, and arguably the more important data point, we got jobless claims data today. And this one looked pretty good. We've got now 3 consecutive weeks of declines in initial claims. Initial jobless claims for the week ending October 26th were 216,000. That is down sharply from 228,000 and way down from the high we saw on October 5th of 260,000. So initial jobless claims continues to trend down. That's a good sign for our unemployment report that comes out tomorrow, the non-farm payrolls report. That's the last big economic data point before the election, and I'm sure it's just going to be miraculous and wonderful. Keep an eye out, though, for downward revisions to that rosy number from last month. And last but not least, continuing claims also took a tick down, although not as good as the initial claims. We got 1.86 million initial jobless claims. That's down from 1.89 million for the week ending October 12th. So that one's ticking down a little bit, but still at elevated levels. All in all, I'd say the jobless claims data today was probably optimistic for the jobs report tomorrow, along with the ADP data that we got yesterday shows probably a good likelihood of a good jobs report. Now, that JOLTS data showing a sharp decline in job openings, that was a little bearish for that jobs report. But right now, if I had to guess, just based on the indicators in that labor data, I would say we're probably looking at another pretty good jobs report tomorrow. Certainly, if you factor in the likelihood of some kind of, we'll say, political influences in the jobs report, it's probably going to be a good number. Last but not least, I missed this one yesterday. Harmon Air LLC, you snuck in that super chat right at the close yesterday when he said you forgot to mention your special guest tomorrow, Janet Yellen. As a matter of fact, Janet Yellen is my Halloween costume. I will be going around Halloween trick-or-treating as Secretary Yellen. And when children come to my door and ask for candy, I will certainly hand out generous, copious amounts of candy. And I'm very pleased to announce a Halloween candy buyback. In order to restore a functioning, healthy candy market, I will be injecting liquidity into the candy market by buying back all the candy I give out today. On tomorrow, on November 1st, I'll buy that candy back for $1.20 on the dollar, 20% price increase. It's the only way to restore a functioning, healthy liquidity to the candy market. Well, thank you, Harmon Air LLC. I appreciate the super chat, the support of the channel. And Secretary Yellen, good luck with your candy buyback. That doesn't sound very free market of you, but I guess that's par for the course for Secretary Yellen. Hey, Snowman1201, thank you for being a Melonhead member for 2 months. He says, hey, Jack, happy Halloween with the Mel emoji. Right back at you, Snowman. Thank you so much for being a Melonhead member. I appreciate that. And Krusty Whitebread says the AI grift is transitory. There we go. Now we're thinking outside the box. I like the way you think, Krusty Whitebread. Yeah, don't worry. It's just transitory. You know, we totally BS'd our way to a 2,000% run up in our stock price. We even got included in the S&P 500, despite a history of recent accounting fraud. That is how desperate and craven for artificial intelligence this market was, that the S&P 500 was willing to overlook SMCI's grotesque accounting fraud just a few years ago. Puts them into the S&P 500. Guys, remember, NVIDIA replaced Enron in the S&P. And NVIDIA replaced Enron in the S&P just a few years after NVIDIA themselves had to settle with the SEC for an accounting scandal when their CFO, Christine Hoberg, admitted that she falsified financial reports. So, you know, you may be shocked to learn that all of these companies with a history of fraud might be doing fraud. Say it ain't so, Krusty Whitebread. Say it ain't so. Who could have seen that coming? Thank you, Charles G., who says Pepsi announced yesterday they're closing 4 more bottling plants. Wow. Someone caught me off guard with this yesterday that they were closing 1, now 4 more. Is this the Ozempic effect or is this the people are broke effect? I don't know. So more job losses, but they will be paid till the end of December. Okay, so they won't show up on the unemployment rolls, probably not until February at the earliest. That's another good data point, Charles G. Thank you so much for that. I got to look into what's going on at Pepsi. Guys, I'm hearing a lot about Ozempic, that sales of sugary drinks are way down. I don't know if it's these magic weight loss pills or if it's just the fact that people can't afford the stuff. And so, soda has no nutritional value whatsoever. And if people are broke and they're looking to cut back on their grocery spend, that's a pretty good place to start. It's also terrible for you. I don't know, but that's 4 more plants. So that's 5 bottling plants in a week that Pepsi has announced that they're closing. So it's time to look into that one. Thank you very much, Charles G. Appreciate the heads up, brother. And thank you very much to Alex L. for gifting 5 Nobody Special Finance memberships. Alex, you are the man. Thank you for everything you do for the channel, brother. I appreciate the support of the channel. Guys, if you got one of those memberships, be sure and show your gratitude in the comments. Say thank you to Alex. Appreciate that very much, Alex. And the Pasta Man is back. What's going on, Nashville? He says Stellantis will become BYD. Book it, Dano. Okay, we'll talk about this since you brought it up publicly. There was a rumor, and I was totally caught off guard by this until Pasta Man reached out to me in my Twitter DMs recently. Apparently, there was a rumor BYD was looking to buy Chrysler from Stellantis. Now, they were very dismissive of this rumor in the press. Both companies came out and denied it, but shortly after that rumor, BYD hired a former executive of Stellantis, their head of European operations was hired by BYD, and a lot of BYD executives have been traveling to Stellantis facilities in recent history. And Nashville, how do I phrase this? Nashville has some information that suggests this is more than just a rumor. All right. Now, I don't have any information, at least not firsthand information, that suggests it's anything more than a rumor. But the press was very dismissive of this. And I hadn't even heard of it. And I consume a huge amount of financial news. And I had never even heard this. It was like buried in like page 20 news. No, BYD is not buying Chrysler. But if you think about it, BYD wants access to Western markets. They need to get around those tariffs. And buying Chrysler might be a way to do it. Although they are going to have a hell of a time getting past U.S. regulators if they want to pull that off. So we'll keep an eye on that one as well, Nashville. Thank you for the tip and for the super chat, sir. And Alex is back. Thank you again, Alex. I appreciate that, buddy. He says, does anyone else find it unusual that the CME Group, which is the largest futures market exchange regulator and clearinghouse, i.e. they can influence the future spot price, can now also buy and sell on its own system? Conflict of interest. Well, possibly they have what they need now to tamp down any sudden enthusiasm for precious metals. I mean, they already have the ability to rig the market. Now they have even more. What is it they're able to do? I forget. You sent me this one yesterday on Twitter. I forget the acronym. I had to look it up, but it was something like they're able to. I can't even remember what the acronym is, but yeah, they just recently received approval to be an even bigger player. I'll be honest with you guys. The inner workings of the commodities markets just confuse the hell out of me. There's so many acronyms and terms that all sound the same. But yeah, I did see that one, Alex. That was a good tip. And basically CME has even more influence over the price of precious metals now. What's the worst thing that could happen? Don't answer that. Thank you, Alex, for the super chat, the support of the channel, sir. I appreciate that. And thank you, M&J. Says we're going to need photo evidence of the costume. Don't hold your breath on that one. Photo evidence of my Janet. Are you saying that a 6'1", 240 guy can't pull off a 5'0" dwarf 60-year-old lady? Is that what you're saying? That my Janet won't be believable? I can pull off a believable Janet. I'll look good in that black pantsuit. Mark my words. I'm gonna start a new trend. Thank you so much, M&J, for everything you do for the channel, both for the super chat as well as for being a blue wrench and keeping things neat and tidy in the chat. Thank you very much. Also, thank you to my other blue wrenches while we're on the subject. Thank you guys for everything you guys do for the channel. Thank you, everyone, for the super chats and the generosity and the support today. I appreciate that very much, as well as you, my magnanimous Melonhead members on YouTube and on Patreon. Thank you guys for everything you do for the channel. I appreciate that very much. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.